Welcome to ForexTV.com. It's Tuesday, March 4th. I'm Remy Hookey for New York Forex Market Buzz. In afternoon trade as of 1 p.m. Eastern Time, Euro dollar is at 1 and 52.26. Sterling dollar is trading at 1 and 98.46, while dollar yen is at 102.80. U.S. equities are in the red with the major indexes down over 1% on the day. Earlier this morning, the Bank of Canada reduced its benchmark rate by 50 basis points to 3.5%. And in its statement, the BOC said core and total CPI inflation have been consistent with the bank's expectations. This is the first time the BOC has cut by over 25 basis points since late 2001. Meanwhile, the RBA raised its interest rate by 25 basis points to 7.25%. This afternoon, I'm joined by Brian Dolan, Chief Currency Strategist at Forex.com. Good afternoon, Brian.
Hi, good afternoon, Remy.
Thanks for joining us today. Well, in today's session, we're seeing continued gains for the Japanese yen as Bernanke's comments continue to add to risk aversion. We saw dollar yen hit 102.66, and Fed funds futures are now pointing to an increased likelihood of U.S. rates falling to 2.25%. But Brian, if you can lay out the fundamental drivers of the yen and also give us your technical forecast.
Certainly. Well, the primary fundamental driver for the yen at this stage is still an increase in risk aversion, and this is stemming from the deterioration in the U.S. economic outlook, which then carries through to the overall global economic outlook. The result is that riskier assets such as stocks, commodities, and in the currencies the yen crosses are all basically coming off of extremely elevated levels, certainly in the case of commodities. And basically this is a sign of investors running for the hills. One of the other developments today, credit default swaps, which are a measure of credit quality and overall risk aversion, have hit a new record high in the entire cycle, starting from the beginning of the credit crunch in the middle of last summer. So basically, the risk aversion has deteriorated even further, and riskier assets right now are in a serious funk.
Okay.
In terms of the levels that I'm looking at in dollar yen, 102.5 is the near-term base. Below that, we are then looking back into lows dating back to the 2005 lows around the 101.50-60 area. One of the other developments in dollar yen is the approaching close of the Japanese financial year at the end of March, and yen repatriation is also in evidence. So for that reason, I expect any rallies in dollar yen to be capped by Japanese firms continuing to sell dollars, buy yen, and repatriate for balance sheet window dressing at the end of the year.
Okay, Brian, let's move on to price action for the dollar block currencies. Following the respective rate decisions by the BOC and RBA, we saw both the CAD and the Aussie decline. So if you could tell us about the pullback in these currencies, and for traders of the Aussie and CAD, what's your strategy?
The strategy for both is to sell those currencies on strength. The Aussie dollar has already had a pretty significant pullback, and it remains weak while it's below the 92.50 to 70 area. I'm looking ultimately for a drop down into the, initially this week I think we can see in the middle 91 area, 91.50 to 70, so we're most of the way there already. And then with dollar Canada, the significant break there occurred in the move over 99.40, and as long as we can close above there, the move is set for back to 101.30.40 initially, and then ultimately back up toward the previous highs around the 103 area. And then the gist of both of their decisions is an implicit recognition that the U.S. economic downturn is going to be much deeper and more prolonged than expected, and that the results for global economic growth are also going to be felt down the road. And that's why the RBA was prepared to relent in terms of signaling further rate increases, and that's why the Bank of Canada moved to the larger than expected rate cut of 50 basis points.
Okay, Brian, now let's shift our focus over to the U.S. dollar against the euro. We've been seeing heavy dollar selling against the yen, but looking ahead to tomorrow's session, we have the ADP report as well as ISM services, and the ECB announcement is on Thursday. So what's your near-term forecast for the euro dollar?
Right. In terms of overall flight to quality and flight to the sidelines, the euro and the U.S. dollar tend to benefit the most when bad news hits the fan here. And the euro, in addition, has a very likely slate of weak data coming out. The ADP for the U.S. is likely to be weak, so that's going to be euro-dollar positive. As well, then, ECB's Trichet is very likely to remain hawkish on the monetary policy outlook, and that's going to keep interest rates also supporting the euro. The bigger problem, though, is that these Eurozone ministers are also very concerned about what the euro eventually, the strength of the euro implies for future European growth. And it's a distinct negative, and the writing is on the wall in terms of the euro having to adjust lower, but it's unlikely to happen this week while we have those events on the schedule.
Okay, Brian, last but not least, now that we've covered most of the majors, let's take a look at cable. Thursday also brings forth the BOE rate announcement early in the North American session, and we have been seeing a rebound in sterling dollar. But fundamentally, as well as technically, what's your outlook for the sterling?
Yeah, I remain extremely bearish on the pound, and market expectations of no change from the Bank of England, I think, are misguided. I'm expecting the Bank of England to surprise with a cut. I initially thought it was going to be a slim majority that would get that through, but I think it's probably going to be a little more substantial, on the order of 7-2, voting in favor of another 25 basis points. Again, the Bank of England, inflation, yes, it's on the horizon, but I think the biggest risk to the UK economy, given their similar housing situation to what we have in the US, is a more pronounced growth downturn. And looking at what's happening to the US, the Bank of England can either cut now or they can wait later and run the risk of a more serious financial and economic slowdown than what they've experienced already. So I remain extremely bearish on the pound. I don't expect it to go back over 200, and I think we'll see some fresh weakness once we're back under 197.5, and I would look for a move back down into the lows that we've seen recently in the 94 to 95 area.
Okay, Brian, thank you very much for insight and analysis into the Forex marketplace.
My pleasure, Remy. Thank you.
Thank you. This has been your Forex Market Buzz with Brian Dolan, Chief Currency Strategist at Forex.com. I'm Remy Hokie. Join us later this afternoon for PM Exchange right here on ForexTV.com.